Let's talk about what's going on here in terms of this tit for tat between China and Europe. Are we going to see deeper pains to come in quarters to come from China? And then is that going to show up in Chinese EV makers' report cards?
Yeah, I think we are, at least in the short term. There really does seem to be a concern on the EU side about market share and the really aggressive pricing that China is capable of putting on electric vehicles that the Europeans just cannot realistically compete with. And I think that they're just feeling very threatened by that. It's fascinating because these two countries, these two nations are so intertwined economically. And I think a lot of people probably don't even think about that until they see China pushing back with an investigation into dairy subsidies and all. So it's just showing there's plenty of ammunition on both sides. And at some point, it seems like they're going to have a truce. But in the meantime, it could cost a lot of money and cause a lot of economic pain.
I saw some interesting line from Geely Automobile's earnings yesterday, because the company's management is saying that we have invested a lot in the region. We contributed a lot to the economy, so we can actually be flexible in our response, perhaps suggesting the idea of producing some of their EV models out of Europe. How do you see that?
Yeah, I mean, that's one of the levers that they can pull, right? They have invested a lot there. Of course, I'm in the U.S. We see them doing the same thing here. There's Volvos being produced here and other U.S. production being planned in the U.S. to get past these tariffs. But at the end of the day, if they're employing a lot of Europeans locally and they start to relocate those plants, that's just further going to cause pain and strife. And again, it seems like both nations have plenty of levers to pull here, but it doesn't seem like they're heading toward pulling less. It seems like they're each looking at more options to cause each other pain.